Hi, I'm Paul from Crypto Balance, and today I wanted to talk about a company called Corl, who are the first company to issue 100% equity ownership through a digital token, through a security token. Now this means as a holder of that token, you'll be paid out quarterly dividends based on Corl's profits, and you'll be paid out in Ethereum, which I think is really cool, so I want to look into this a bit more. There is an airdrop going on for this as well, so you can get some of these tokens by participating in the airdrop. So go to the site and click on airdrop program. So I'm also really interested in the company Polymath and the token Polymath. I've got another video on that you can go and check out. And I first heard of Corl through Polymath's Twitter feed, and as it turned out, Corl is a ST20 token, and Polymath have been involved in helping to launch this security token. So what is Corl? Corl is a company that intends to provide funding to new startup tech companies, something called capital as a service. Now basically they provide funding to startups, then that company pays Corl a percentage of the revenue. I read this from the white paper. Companies that meet our strict funding requirements are financed through a revenue sharing arrangement, whereby companies receive upfront capital in exchange for a percentage of future monthly revenue until some predetermined repayment amount is met. This type of financing structure is mutually beneficial for Corl and the company receiving funding, because the objective for both parties is to maximize revenue. So they say it's going to be typically between 2 to 10% of revenue, depending on the amount of revenue each month. So on low months it might be towards the 2% end, and on high months where there's a lot more revenue it might be towards the 10% end. The way Corl are talking about doing this is that there is a cap, so it's not like you would pay that these companies that they're funding would pay back revenue forever. I think they mentioned in the white paper that it's between 1.5 times the original investment and 2.5 times. So once that's met, the company that they've funded would own 100% of the company, and they would stop paying back Corl. However, there is one more aspect to this. Corl say they would reserve the right to buy 2% of equity in the companies that they invest in. So basically this is a way to be exposed to startup tech companies without having to have ownership in each individual company. You just have ownership of Corl, and they invest in all these other companies, so you're exposed to them. And if they do take a 2% ownership of some of the companies that they really like, because they reserve the right to take a 2% ownership. They don't necessarily for every company they invest in. So I presume that would mean that if they're investing in all these different companies, the ones that do really well and the ones that they think are big winners, they would take out that 2% in. So I think this if there's people in Corl that are great at picking what tech startups are going to do well, and that's obviously what this is all going to come down to, then I think it would be quite cool to be exposed to those kind of tech startups without having to go and research each one and discover each one myself. And of course it's very difficult to invest in each one, and I wouldn't know how to go about that. But this does seem like a cool way to get some exposure to tech startups, which is something that I'm very interested in. So one of the things that I really like about this project is being paid dividends in Ethereum. I think that'd be really cool. Obviously this is starting to feel a lot more like traditional investment, which I think is very welcome. I think as the cryptocurrency markets mature, I think there'll be a lot more people looking for this kind of investment. As we all know, there's an enormous amount of speculation in the cryptocurrency markets, where someone will buy a token or a cryptocurrency that really they have no intention to use in any way. They simply buy it because they believe that someone in the future will buy it for 10 times as much as they did. And the person that buys it for 10 times as much as they did will buy it because they believe that someone in the future will buy it for 10 times as much as they did. It's great and all, but I personally welcome these kinds of tokens that are going to be much more anchored to the fundamentals of the company behind it. And I really like that there's no use case for this token aside from the fact that it pays you dividends. That's what it's for. It's to represent ownership of a company, and that ownership of a company pays you dividends. It's not a speculative investment. It's a much more straightforward investment. I invest this much, and I get this much back, as if you would buy a business or anything like that, that you buy something that generates revenue. And I certainly very much welcome the opportunity to start looking at these types of investments, such as Corl, into my crypto portfolio. So one of the important things to remember about Corl is that it is a security token and it is adherent to regulations. Now, firstly, you have to be KYC verified, and that means know your customer. So you have to prove your identity. Once you've been verified, you won't necessarily be eligible to buy as many tokens as you like. So in the white paper, it sums this up quite nicely. So non-eligible or retail limits annual investment contribution to $2,500. Does not require any income or net worth criteria. So what that means is that as long as you've proven who you are, you'll be able to buy up to $2,500 worth of tokens. Eligible, so this is like the next tier up, limits annual investment contributions to $10,000, requires proof of income over 75,000 USD per year, or $400,000 net worth, or some variation of that. An accredited investor would have no contribution limit, and that would require proof of either $200,000 annual income or $5 million net worth. So what about a secondary market for this token? Well, obviously it's quite different because you have to be KYC verified to invest in this in the first place, and that's no different in terms of selling it on. So we're all used to being able to buy a cryptocurrency on one exchange, sell it half an hour later on another exchange if we want, to someone who we have no idea who they are. So that won't be the case with the security tokens. Reading from the white paper, Corl will be developing a portal into the decentralized network using the 0x protocol to facilitate the reallocation of CRL amongst whitelisted token holders. So there will be a secondary market, but don't expect it, at first at least, to be anywhere near as broad as the current crypto markets. There will almost certainly be a lot less volume, you would imagine, and a small percentage of the overall cryptocurrency community on these platforms. But I think they'll get bigger and bigger and bigger as more and more security tokens hit the market. Corl say that they will be paying out 10% of their profits in dividends, and the other 90% will be reinvested. So personally, I think that's great. Obviously, the temptation would be to say, oh, I want them to pay out 50% or 60% of their profits or 100% of their profits, right? Because that's more money for me. But of course, in the long run, that would stifle their growth. So 90% is great. But, eventually that 10% will become much bigger than if they'd paid out 100%. So that seems like a good ratio to me. I'm definitely okay with that. So just looking at this page here on the site, Corl say you can earn 15 to 30% annually by investing in markets underserved by mainstream finance, and earn steady income with quarterly payments. Now, 15 to 30%, I don't know how they come up with that, because I mean, obviously they've got a business plan and they're estimating how profitable they think they'll be. But I presume, business plans are just plans. So who knows how profitable they'd be. Obviously there's a lot of different factors that come into that, but 30%, if they were if you were to achieve around a 30% annually, that's brilliant. I think as investors in the crypto market, we may have to kind of readjust our thinking away from 2000% gains and Lambos and when moon and all that kind of stuff, and look, this to me is not that kind of thing. This is, as I think it mentions here, it can help offset your exposure to volatility, and I think that's a really good point, and that's something that really attracts me to this, because I don't see this being tied to the big swings in the Bitcoin price. If Corl is very profitable and the profits are consistent and consistently growing, and this token simply just is an act to pay out dividends, then why should it rise or fall dramatically just because Bitcoin goes up or down? So what are they going to do with the Ethereum that they raised through this token sale? So here it is. So 14 million of it is going to be the fund that they use to invest in these tech companies. Of course, that makes sense. So let's take a quick look at the team. Obviously, if you're thinking of investing in this, then this is very, very crucial, because these are the guys and the girls that are going to pick who's going to get this funding, and it's their judgment that obviously this whole thing depends on. So you can look up all these guys and girls on LinkedIn. It's got 35 years in investment banking. That sounds great. 37 years in private equity. Again, that's the sort of stuff you'd be hoping to see. 17 years in compliance, financial crime and blockchain. So, just skimming this, I was already worried this is going to be a long video, so I'm not going to go away and look into LinkedIn on each one of these people involved. It looks like they've got a big chunk of experience between them. I'm going to go and look into this more before I make any decisions on this. But as far as I can tell so far, there certainly seems to be an abundance of experience, but I definitely need to go and poke around in LinkedIn a little more, as you should too. So, in summary, my thoughts on this are very positive as a whole. I love the idea of being paid out dividends in Ethereum. So I think it's interesting that this is the first SC20 token that I've seen, at least, and you would think that the first one that Polymath have helped to launch would be a bit of a flagship, would be something that other companies would look to think, is this something that we should do? So hopefully that this is going to be a big winner and a big success story to help encourage more companies to offer security tokens on the blockchain. Other things I like about this, I really like that it will be less volatile and more tied to the fundamentals and the earnings of a company. So I really like the idea of being exposed to tech startups. It's not something that I'm able to go and do myself. And the closest thing I have to that is obviously the investing in cryptocurrencies. But this is a different aspect of it, and I'm sure there's a lot of companies out there with very innovative ideas that aren't anything to do with cryptocurrency. That through Corl I might gain some exposure to, and I think that could be it's just an interesting addition to my portfolio. So all in all, I suppose your opinion of it really comes down to whether you would put your money where your mouth is. And for me, I am looking to take out a small position in this. I say small not because I'm not confident about it or I only like it a little bit, just because I'm kind of fully allocated elsewhere. I recently brought a lot of Polymath, and I'm not intending to sell any of that to take out a position here. I'll probably take out a small position in this through some of the Ethereum mining that I'm doing. And yeah, just to see how it goes. I think it would be interesting just to participate in this and to be part of. This kind of feels a little bit historic to me. The first company to issue 100% of its equity on the blockchain. I kind of like the idea of being a part of that. I'm not too sure what to expect from it, but it's more for me. I'm just going to do it just to be involved in it and to understand more about the process and to give me a basis of comparison going forward when looking at other companies that issue security tokens. And that makes it sound like I'm just doing it because just for the hell of it, but I do think this sounds like a really cool company, and I'm happy to be involved in some small way. So that's it from me on Corl. I hope you've enjoyed this video. I hope you've learned something. Remember, this is all just my opinion. You should of course do as much research as you can for yourself before you decide to invest in anything. and anything that I've said you should verify for yourself. And of course, none of this is in any way financial advice. It's just my thoughts and my feelings on this project. So that being said, please, pretty please, like this video and subscribe to my channel. It's a new YouTube channel, and it's quite difficult to get traction when you first start out. So if you have found any value in this, I'd really appreciate a subscription. And definitely, if I'm misinformed, if I've misunderstood anything, if you understand anything differently, if there's something you can add to this in any way, I'd be thrilled to read your comments and of course respond and start a conversation about this. Okay, thanks for watching. I'm going to see if I can catch the last 45 minutes of Liverpool in the Champions League. That's not why I'm ending this video. I'm ending this video here because it's gone on long enough.